How are you?
Greetings, aspiring investors. Are you on the lookout for a simple and low-risk way to enter the investment arena in 2026? Well, look no further because we have the perfect solution for you. Exchange-traded funds, or ETFs, are an exceptional option for beginners. These funds allow you to invest in a variety of assets with a single purchase, providing instant diversification and, consequently, reducing risk. Let's look at the Vanguard Total Stock Market ETF, VTI, as an example. This particular ETF grants you access to thousands of shares of US companies, ranging from tech giants to nascent startups. What does this mean for you? Simply put, your investment is spread across a broad spectrum of sectors and companies, lowering the impact of any potential market downturn. Another popular option is the Vanguard S&P 500 ETF, VOO, which tracks the performance of the US's 500 largest companies. Investing in this ETF allows you to partake in the growth of the nation's leading corporations, offering a straightforward way to engage with the stock market without complexities. Enter the beauty of ETFs: they generally present lower fees compared to other investment funds, ensuring that more of your money works for you. And the cherry on the top, you can buy and sell ETFs during market hours, providing you with the much-needed flexibility and control over your investments. It's important to note that carrying out prior research and understanding the nature of the investment is crucial. While ETFs are an excellent starting point, ensure that you align your choices with your financial goals and risk tolerance. Happy investing! Now, let's explore some of the advantages and features of ETFs further. ETFs are essentially a basket of assets that are traded on an exchange. This dynamic feature allows for real-time pricing and the ability to trade throughout the day. This function is in stark contrast with mutual funds, which are traded at the end-of-day net asset value. Moreover, the ETF structure aids tax efficiency, making them a favorable option for long-term investors. Due to the creation and redemption process unique to ETFs, they typically incur fewer capital gains than mutual funds. Tax efficiency is an important factor to consider, as minimizing taxes can lead to enhanced portfolio performance over time. ETFs rank high on the scale in terms of transparency as well. The majority of ETFs disclose their holdings daily, which allows investors to see exactly what they own. This transparency assists investors in making informed decisions and ensures they are familiar with the underlying assets in which they are investing. Possess the benefits of diversification through ETFs. By providing access to a wide range of securities or indices, ETFs offer investors immediate diversification, reducing the risk associated with single security investments. This diversification helps to mitigate potential losses from fluctuations in the market. Let's discuss some risk factors. Although ETFs offer several upsides such as intraday trading, instant diversification, and transparency, they are not entirely without risks. One of the major issues associated with ETFs is the tracking error, which is the divergence in performance of the ETF from its target index. Concerns about liquidity risk in the ETF market have emerged due to the expanding range of ETFs. While most broad market ETFs maintain significant liquidity, it's critical to check the liquidity profile of an ETF before investing, particularly for more niche or specialized ETFs. Moving on, let's underscore the fact that all investments entail risk, and ETFs are no different. The risk in an ETF can come from the underlying assets, so thorough research is vital to understanding what the fund is investing in and its inherent risks. Additionally, since ETFs trade in the secondary market, the market price may not always equal the actual net asset value, NAV, of the underlying securities. This discrepancy presents potential risk to investors who rely solely on market orders. It's important that individual investors, especially those new to investing, have a basic understanding of asset allocation and the role it plays in their investment strategy. Asset allocation is the practice of spreading funds across different types of investments to achieve a predetermined level of risk and return. ETFs also offer strong inherent advantages due to their broad-based and focused nature. By their very structure, ETFs provide and support the best risk management and investment strategy control for individual investors. The year 2026 creates a compelling backdrop for introducing ETF investing to beginner investors. The economic climate, market trends, and the early stages of some newly emerged industries present exciting investment opportunities for those who are willing to take the plunge. With the ongoing technological advancements and the associated growth in the tech sector, beginner investors could consider ETFs such as the Vanguard Information Technology ETF, VGT, as a part of their investment portfolio. VGT focuses on tech and tech-related companies, thus providing exposure to a basket of securities within this sector. Prospective trends in the realm of clean energy and green technology make investment options like the iShares Global Clean Energy ETF, ICLN, a noteworthy consideration. ICLN, for example, comprises companies facilitating the transition to a cleaner energy future. The healthcare sector remains pivotal, and innovative advancements are continually shaping its landscape. The Healthcare Select Sector SPDR Fund, 45, offers investment exposure to the healthcare sector's leading companies, rendering it an intriguing option for 2026 novice investors. A rising trend in consumer behavior towards e-commerce gives rise to potential opportunities linked to the performance of businesses in this sector. ETFs like the ProShares Online Retail ETF, ONLN, align with these broad economic trends and stand as an attractive investment avenue. The start of a new decade often provokes reflection and anticipation of potential changes and market shifts. These critical junctures can create investment opportunities that work well for ETFs, which thrive on capitalizing on broad market trends. The fluid and rapidly evolving nature of global markets can pose a steep learning curve for beginners. ETFs reduce the challenge by offering a structured and simplified approach to investing in a variety of asset classes. Essentially, ETFs are an excellent starting point for beginners who wish to invest with minimal risk and without the hassle of directly buying individual securities. They provide instant diversification, which mitigates the risk of significant loss on any single holding. Further, ETFs offer a cost-effective option, given that the associated fees are often lower than those of mutual funds or other investment instruments. The lower the fees, the higher the proportion of invested capital that can potentially earn a return over time. The accessibility and flexibility of ETFs make them an investor favorite. They can be bought or sold throughout the trading day. This flexibility empowers investors to react to price movements or market news and make transactions when they're most comfortable. Researching each ETF and understanding its constituents and investment strategy is vital to making informed decisions. It ensures aligning each investment with personal financial objectives and risk tolerance. Thankfully, most ETF sponsors provide resources to help potential investors understand their products. In conclusion, with careful selection and a clear understanding of their investment objectives and risk tolerance, first-time investors can take their initial steps into the world of investing with confidence, using ETFs as their chosen instrument. The year 2026 presents a prime opportunity for prospective investors to begin their investment journey. Taking advantage of the available investment options and taking prudent, well-informed steps could set the stage for a prosperous financial future. The financial landscape continues to evolve, providing new avenues for potential growth and risk mitigation. Keep abreast of these changes and ensure that you're adjusting your investment strategies accordingly to capitalize on the momentum and navigate through adversity. Remember, the journey of 1,000 miles begins with a single step. Whether you decide to allocate a small portion of your savings towards ETFs or engage in a regular investment plan, what's important is your commitment to begin and grow your investment portfolio over time. As you prepare to step into the realm of investing, keep this journey an exciting and continuous learning experience. The more you understand about the economy, the financial market, and specific investment products like ETFs, the better equipped you will be to make informed decisions. As the year 2026 steers toward ushering in new prospects, the decisions you make now can lay a strong foundation for your future wealth. The prudent and calculated use of investment tools like ETFs can help you navigate the journey smoothly, reducing the inherent risk. It should go without saying that investing, by nature, entails a degree of risk. However, with the smart usage of investment tools like ETFs, with their inherent benefits such as instant diversification and low-cost involvement, you can limit these risks and optimize your potential returns. With the right mindset and a commitment to continued education and a sound investment strategy, you can maximize the chances of success in the financial market and become a successful investor. Here's to a prosperous and rewarding investment journey in 2026 and beyond.